It's the Market Day Report. I'm John Jenkinson. Thank you very much for joining us on RFDTV and Rural Radio 147 on Sirius XM. Let's go right straight to the telephone and get an update now with analysis. We talked to Jim McCormick with Allendale Incorporated is here on the line with us. Good morning, Jim. Happy Friday. Well, this is the day. And I was telling the audience earlier that in the scope of things, as we have these monthly reports, this is probably one of the bigger, if not the biggest one.
Yes, John, thanks for having me on. This is definitely one of the granddaddies of them all. We get a lot at us, acres for wheat, final production estimates, some pretty big revisions of yield. So tons of excitement. We've had some pretty boring reports the last few months, so maybe 11 o'clock, noon Eastern, we're going to get some volatility.
First thing this morning, Jim, we had USDA report. We had an overnight sale of 320,000 tons of corn that went to unknown destinations. And the reason I mention this, Jim, is because one of the things that we're going to find out in this report today is what USDA will do with some of our exports. And I know that the trade has been watching what could happen with exports of soybeans, but they'll also be kind of interested in what's going on with the corn exports as well.
Yeah, that's correct, John. I mean, we know the bean sales are way behind. They've gotten a lot of press. They're running 14% behind last year's pace. The corn, on the other hand, we're dragging about 2 or 3% behind last year's pace. So, the question is, like with today's sale, is that enough to get the USDA to say, hey, maybe we won't lower that number just yet, and we'll just, we'll give it a few more months, see how Argentina's crop finishes out before we make that adjustment. So it's nice to see that demand. I would guess that's Mexican buy-in. They tend to come in here and buy right before the report historically. So if I got to make a guess, they're the buyers last night.
I want to get into the futures here, Jim, and talk about these and bring everybody up to date on the latest of the numbers that we have so far. Right now, it's March corn up a half at 349 1/4. New crop December corn 383. That's up a quarter. But we were talking about the soybeans, and let's go there next. It's January soybeans down 2 1/4 at 938 1/4. August soybeans down 2 1/2 at 971. This soybean market really seems to try to be factoring in maybe some bearish news ahead of the report?
Definitely. If you look, we've broken, 20, 25 cents in the last few sessions. This market is anticipating a bearish report, and rightfully so. The exports right now, the current estimates for the exports to be 2% ahead of the USDA's, ahead of last year's pace. It's currently running about 14% behind. At the current rate, we'll miss the export number by about 300 million. Overstated. So the trade's looking for revision. The average guess is around a 35 million bushel downward revision, and I think that's why we're down here. The market's priced in about a 35 million revision lower in exports. Our belief here at Allendale is they're going to have to cut it by 100 million. The question I have, are they going to have the nerve to cut it 100 million today, or are they going to cut 25 to 35 million and just kind of keep lowering it each month over the next couple months? That's the million-dollar question today for the beans.
Let's go to the wheat market, Jim. In that Chicago wheat market right now is up 3/4 at 434 on the March. New crop July is steady at 458 3/4. For the Kansas City wheat market, March up 3/4, 441. July wheat also unchanged at 469 1/4. March Minneapolis wheat is down 1 at 628. We're going to have that wheat seedings in this number as well, and I think the trade probably understands that's the seedings. That's not what may make it all the way to the grain.
That's correct. This is the seedings. Now, we're looking at, I think, some of the lowest wheat seedings in America since like 1909 with this number. So the market's going to, we're pricing in less acres. And then what's going to happen now is we look at what's going on. There's a drought building in the plains. We thought some winter kill problems more unlikely. That we'll see what happens as we get into the springtime. So the wheat, I think, has got a little bit of story. A lot of, acres are down dramatically and a little bit of weather stress. So that may be a kind of the bull. That may be the one thing that's friendly in the long run that pulls the U.S. Grain markets out is follow the wheat into the springtime so they continue if this drought expands, plain and simple.
Well, Jim, we're all waiting to hear what you have to say about the livestock trade, so we'll take a break and we'll come back on the other side and do just exactly that. So we've got more coming up. Be sure and stick around with us. We'll be back with the Market Day Report right after this. Jim McCormick with Allendale Incorporated is on the line with us. He held over from the grain segment on to this segment. So let's get his thoughts on this livestock trade. And Jim, we'll first start with the cattle trade. It's kind of like a flat tire here recently. A lot of folks saying that there's been a lot of air let out of this cattle market.
I totally agree. I mean, the cash market last week, they thought they'd get a higher number. They didn't get it, and that just kind of took the air out of the tire. And then we were down again this week. Cash wrapped up between 119 and 120. And, right now the charts are looking a little bit negative. We're trying to hold the 200-day moving average. If we take that out, you're probably going to accelerate the fund liquidation. The funds have been long the livestock forever, and they're definitely kind of, winding that down a little bit. I think some of that is, just oversupply of meat coming at us. I think some of us maybe is a little bit NAFTA fears. I mean, we get, trade-wise, I think people are a little bit skeptical of what could happen. So I think they're, taking the money off the table.
Jim, Marlon Bowling and I were out in the hall just a little bit ago looking at some of these charts and talking about some of this. It wouldn't take us too much to get back down here if we continue to go down with this cattle market back to levels that we saw last August of last year.
Oh, no doubt about it. I mean, we're at critical levels. I mean, we're if you look at these April cattle, we're kind of where the spring highs were, right around this 120, kind of caught us. We're taking that out. The 200-day moving average is at 117.87. If you take that out, all of a sudden it kind of looks like that whole flag, higher proportion we've been in, all fall, early winter is wiped out. And I agree. We could go right back down to 110 with the supply of cattle building into the beginning of the year. Plenty of hogs out there. Plenty of chickens out there. We could see this market go. If the stock market would have a correction, everyone's looking for the correction somewhere down the line. If that happens at the wrong time, you could easily see it, another $7-8 drop in the cattle, I believe.
Right now, February live cattle down 46, 116.62. April fats down 36 at 118.52. January feeders down 54, 143.28. March feeders down 63 at 140.75. February hogs, though, now up 10 at 71.08. April hogs up 46 at 74.28. So, Jim, maybe just a little bit of life coming back to the hogs, but the fundamentals, are they starting to weigh on this market?
I think the fundamentals are weighing on the market also. I think the chart's weighing on the market. If you look at it, John, we had a high back there on these Feb hogs back in late October. You got up to 73.30. We took that out this week and then failed. Had a big key reversal day down on that failure day 2 days ago, and that's a technical sign of the tops end. So when you got the cattle market rolling over on the charts, the hog market's rolling over on the charts, and So I would say if you're a hog producer, you can lock in margins. You better start locking them in pretty quick.
The funds obviously are paying close attention to the Dow and the crude oil, though, today. Those markets really showing some big gains.
Those continue to gain. I mean, the money's flowing in. I think the market's excited. You got a lot of the tax cuts are starting to show up. We're getting people coming out, giving raises to some employees. Bonuses are kicking in, and I think the market's optimistic that some of that money is going to trickle back into the market and into the retail sector and increase company profits, and they're pricing that in right now.
That's a very good point. We came all the way from down just above $46 a barrel to now $63.63 a barrel, and this morning, even though we're off 17 cents, still seems to be headed higher. Some say that 70 is not out of the question.
Shoot, John, I've read a couple of people arguing the 80s not out of the question. And, what'll probably happen is what usually happens, if we do get up near 70, look for all sorts of production to come online, not just in the United States, but around the world. OPEC tends to do this, and then they'll overproduce it. And, probably a year from now, we'll be talking $53 crude because they'll overproduce. But right now, the trend is up, and the bulls are in control of the crude oil market right now.
Jim McCormick, Allendale Incorporated, McHenry, Illinois, here with us. Jim, thank you very much for the insight. And Janet, when we checked just a moment ago, the Dow was still headed higher, about that 100-point higher level. But we're going to continue to watch it. But 25,650 is where we've been at one time today.
Okay.